Hello everyone, this is Dr. Hessa Al-Fahdel, the course coordinator of Accounting 112. In this video, I'm going to explain Chapter 9, Part 2. The chapter title is Accounting for Receivables. Please pay attention. The second learning objective in this chapter is to estimate the uncollectible based on sales and account receivables. In the first part of the chapter, we talk about estimating the bad debt expense using the allowance methods. Now, we're going to learn how to estimate the bad debt expense using two methods, which is first, percent of sales method, second, account receivable method. And under the account receivable method, we have two different methods, percent of account receivable and aging of account receivable. Now let's move on with the first method, which is percentage of sales method. How we're going to calculate the bad debt expense here or estimate the bad debt expense? I'm going to take the current credit period sales multiplied by the bad debt percentage that will be given in the question, and then I'm going to get the estimated bad debt expense. Then I'm going to prepare the journal entry. To understand it more, let's see the next example. We have here Musicland. They have a credit sales of $400,000 in 2017, and it is estimated that 0.6% of the credit sales will eventually prove uncollectible. So now we have credit sales of 400, but we assume or we estimate that 0.6% of this credit sales of 400 will not be collected. So now how I'm going to record the bad debt expense for 2017? Remember, we're going to use the percent of sale method. So I'm going to say 400,000, which is the credit sales, I'm going to multiply it with the bad debt percentage or the uncollectible percentage, which is 0.6%. If I multiply 400,000 with 0.6 percentage, I'm going to get 2,400. So it means that Musicland accountant computes the estimated bad debts expense of 2,400. Now my bad debt expense that I estimate will be 2,400. So now how I'm going to record the estimate of bad debt expense? I'm going to say bad debt expense to allowances for doubtful account 2,400, 2,400. How did we calculate the 2,400? We used the percent of sale method. We took the credit sales multiplied by the percentage of the uncollectibles or the percentage of bad debt. Now let's see here the example of percent of receivables method. Now we're going to calculate the bad debt expense but using a percent of account receivable. We have here Musicland has 50,000 in account receivable. So we have 50,000 of account receivable and $2 credit balance in the allowances for doubtful accounts. So we have $200 credit in the balance of the allowances for doubtful account. And we have 5% of the receivables that will be uncollected. So we assume that 5% from the account receivable will be uncollected. So what I'm going to do here, I'm going to say 50,000, which is my account receivable, and I'm going to multiply it by 5%. Why I'm multiplying 50,000 multiplied by 5%? Because I'm using here percent of receivable method. It means that I'm going to take a percentage out of the account receivable. So 50,000 multiplied by 5% will give me 2,500, which is my ending balance. Now remember, the 2,500, I'm not going to use it when I'm going to record the journal entry of the bad debts expense. Now remember, after calculating the ending balance of the bad debt expense or the allowances for doubtful accounts, I'm not going to use the 2,500 in the entry. This is only the first step. Now, look at the T account here. We have a T account for the allowances for doubtful account. They already told me in the question that we already have 200 as balance, credit balance, previous credit balance. So it is here 200. And the 2,500 here is the ending balance of 2019. So now, how I have a total of 200 and at the end of the year I have 2,500. It means that there was some adjustment. How I'm going to calculate the adjustment? I'm going to say 200 minus 2,500. It means that I have adjustment in 31st of December 2,300. This adjusting entry, I'm going to use it when I'm preparing the bad debt expense. So when I'm going to prepare the journal entry, I'm going to say bad debt expense to allowances for doubtful accounts, which is 2,300, 2,300. So you have to remember that we have 3 steps to prepare the journal entry under the percent of receivable method. First, you're going to calculate the percentage out of the account receivable. Then you are going to prepare a T account. Then you are going to check if there is any previous credit allowances of doubtful account. If you do have credit allowances, then it means that this 200, it should be recorded on the credit side. And the amount that you calculated as a percentage out of the account receivable, which is 2,500, it is the ending balance, which means it's the last thing. Then remember here, you need to take the difference between the previous balance and the ending balance. And you're going to get here 2,500 minus 200 will give me 2,300. So remember, when you're recording the entry, you always put the adjusting entry, not the ending balance. This is very important note to remember. Now let's move on with the aging of receivable method. As I said earlier that we have 2 methods. We have percentage of sales and we have the account receivable method. And under the account receivable method, we have 2 methods. The percent of receivable, which we already saw it in the previous example. And now the second method, which is the aging of receivable method. We also have 3 steps to calculate the bad debt expense under this method. First, we need to classify each receivable by how long it is past due. Then, each age group will be multiplied by the estimated bad debts percentage. Third, we need to estimate the bad debts for each group are totaled. To understand this, let's see the following example. As you can see here, we have a table for Musicland company. They do have here 3 different or 5 different age groups of the account receivable. So what I'm going to do now, I'm going to see here the total receivables. So I have here not due yet. We have some of the account receivable, they are not due yet. How much is the total for the account receivable that they're not due yet? 37,000. So this is the first age group. The second age group, which is 1 to 30 days past due. So we have account receivable that it should be collected for 1 to 30 days and it's past due. It is due, but the customer did not pay us. How much is the total? 6,500. So you can see here, the age of the account receivable here is 1 to 30 days. That's why we call them aging method. Why? Because you're going to classify the account receivable according to the age of the past due. Then we have 31 to 60 days past due. We have account receivable that they passed due 31 to 60 days. It means that this is account receivable that they did not pay it from 31 to 60 days. It's past due. How much is total of the account receivable that it should be paid, but it's past due of 31 to 60 days, which is 3,700. Then we have another category, which is 61 to 90 days past due. So we have account receivable, but the customer did not pay us, and they reach up to 61 to 90 days that still not yet paid. So how much is the total of the receivable under this age category? 1,900. And we have also account receivable that is more now than 90 days. We did not collect it for more now than 90 days. How many is the total receivable under this category, age category? 900. Why we call them age? Because we have account receivables, and the account receivables are divided or classified according to a certain age. Then they are going to give me in the question the percentage of the uncollectible. So how much we assume that we're not going to collect under each method. So we have here 2% under not yet due. We have 5% under the 1 to 30 days. We have 10% from 31 to 60 days. We have 61 to 90 days, 25%, and we have 40% for 90 days. As you can see, the percentage of uncollectible is going to increase over the age of the account receivable. If the customer he did not pay us within 90 days or more, it means that the chances to collect the account receivable will be high. It means that we are not going to collect it. That's why we assume 40% out of those 900 will not be collectible. Why? Because the customer already he did not pay over like 90 days. So are you going to assume that or expect that the customer will pay? No. You can see that according to the age, the percentage will also varies. Now what I'm going to do, I'm going to multiply 900 with 40%, and I'm going to get 360. And 1,900 multiplied by 25%, I'm going to get 475. 3,700 multiplied by 10%, it will give me 370. 6,500 multiplied by 5% will give me 325. 37,000 multiplied by 2 will give me 740. So the total will give me 2,270. This is the total or the estimated uncollectible amount. We're not done yet. Remember, we need to prepare a journal entry to record the bad debts. Now you need to take care when you are doing the aging of account receivable. It's similar to the percent of received method. So in the question, they're going to give you here, in step 1, they're going to give you here how much is the allowances for doubtful account previously, or the balance of the previous year. Here they told me the balance is 200 credit. So that's why I'm going to record the previous allowances of balance of previous year in the T account, which is 200. Then remember, when we did the aging method table, the total of the unestimated uncollectibles was 2,270, and it was here the ending balance, 2,270. So now I have 200 as a balance, previous balance, and I have 2,270 as an ending balance. It means that there was some adjusted entry step. So if I deduct 200 minus 270, it means here I'm going to get 2070. This 2070, I'm going to use this amount when I'm preparing the journal entry. Remember, we do not record in the journal entry the ending balance of the allowance. We have to use the adjusted balance when we are preparing the bad debts expense. So I'm going to say bad debt expense to allowances for a doubtful account, 2070, 2070. Again here, we're going to talk about the aging of account receivable. So they're going to provide me here with an example, and this will be given in the question as well. And I'm going to prepare here the T account. They told me that the allowances for doubtful account previous balance was 500 on the debit side. That's why I'm going to record here 500 on the debit side. And they told me that the ending balance of the allowances for a doubtful account, that I already calculated it in the previous table of the aging method, which is 2,270. From where I get the 2,270, go back to the previous example, the table of the aging method, when I took all of the total receivables multiplied by the percentage of the uncollectible, I took the total and then I add the total of all of the age and I got the total of 2,270. Now remember, when I'm going to prepare the journal entry, I'm not going to use the 2,270. I'm going to use the adjusted amount. So now how I'm going to calculate the adjusted amount? I'm going to say 500 plus 2,270 and it will give me 2,770. Why did I say plus? Because I have 500 on the debit and 2,270 on the credit. If you have one on the debit, one on the credit, you have to add them. So I'm going to use the 2,770 as the amount that should be recorded in the journal entry. So I'm going to say bad debts expense to allowances for a doubtful account, 2,770, 2,770. This is the end of chapter 9, part 2.